So guys, today I'm going to be making a video on my own system. I'm making this video for me, actually, not for anybody, for me. So this video is going to make me, is going to show you or show me rather how my system is, what my system and how it works. So I'm going to do it and do some back tests if possible, but even if I must back test, then it would be later another video, but I just want to build an ideal. I already have it, but in most cases I tend to just let it be the way it is. So I think this is it. It even happened here. So I would be targeting here in my own I'll be targeting here as target, right? So what is my system? Everybody knows the system where they say structure. Everybody knows structure. Where here is a brick of structure, right? And we expect price to come back here, maybe cause a retracement and go. Do you understand? So now I want to make something clear to myself that should price come back here, should I see price come back to this place, is because I see a supply zone here or an important candle or a supply zone, I mean a demand zone or an important candle that shows that it needs to be filled before it continues. But if I don't see it within this range, I would see this as liquidity. This as liquidity. Because if price should start coming down like this, and the nature at which price comes down here also matters. Let's assume it comes down this fast. Excuse me, this fast. It is likely going to take this. If it closes, it is a change of character. If it does something like this, not this one, right? It is a change of character. So what are we expecting is this. The price does this, and it does this. And this is not the safest, but this is the safest. The second one is the safest to take this. So once you see it like this and you see how it happens, fine. Then you know that this is going to hold because you're not just entering on limit. No, that is the wrong way to do it. If you are going to do it, let's assume you already see this in a higher time frame and you mark a zone like this. You mark a zone like this. You want to see what price is doing here, then you enter. So say in the lower time frame it does like this, right? And it does equal, grab this one and it did this, you can take it. It doesn't matter how how good it looks, just look for a double confirmation. What you want to see is this. It can just be an important candle confirmation. What is an important candle confirmation? Let me show you on a real chart, right? So this is an important candle confirmation here. As you can see, price has been going up, right? Price has been going up. And I see this happen. I see this break for this important candle. If you don't know what important candle is, you can go to my channel. So if I say I see this, I want to enter at the mitigation of this. So now you see after this break, hmm, after this break, because this low, let me show you something. This high brought this low, and this low brought this high, and this high now brought this low. But the first mitigation is not where the break happened. Do you understand? So this high brought this and it did this. Did you see? It did not take this one and it did this. Do you understand? So now, if I am to say, okay, me, I don't trust this particular break here, right? I'm going to wait till this one breaks, till this one breaks. So this candle is the one that break it. So anything within this range now will be within this last swing down. So let me mark it. So it will be that this is my swing, this last one, and this one, right? So within this range down is where I'm looking for my zone. And what did you see? For me, many people have been saying we'll see supply here, we see supply here. Have you? With me, I have a theory where there's a liquidity gap, at least 50% mitigation. And you see, until this point, there was never a 50% mitigation. Even at the mitigation, oh, it deceived us that, okay, this is it. It broke this important candle and it come back and grab the liquidity here. So let's see what happens, what really happened here. Look at this. Did you see? Is there a closure? No, I did not see a closure. This is all in 15 minutes time frame. It's just at the close of the candle of this candle and the opening of this one. So you see what I'm saying. You have to see a confirmation. So remember, this story started here. So it means you have to be patient. So say let's let me I mark this as an entry, 50%. This is it. Because I have seen from here. This is I have not even gone to any time frame. I've seen from there. And we are selling like this. Where would my take profit be? Here, right? But I'm going to give it a bit more space due to spread. You know how spread can be. Sometimes you see on just see price going. So spread, you give it more space and you do this. So as you can see, this is my entry. And let's see what price is doing currently. Did price take this high? So you can use important candles to be trading. You understand? So which is the important candle here? Is this one. And this is the next one. This is the next one. This is the next one. So you see within this important candle, this is a very important high that you see price just before it did this. Look at what happened. So if I am trailing my lows, this is what I use. I mean trailing my stop loss. This is what I use because I'm speaking this to myself. This is what I use. So you see what price is doing. It took its time to do all of this from 8:15 to 11:30 before it started pushing. So the next important candle is this one, of which if I trailed my low, it would have taken me out. So now, how do I go about all of this? Hmm? Let's see how many I would have secured here. How much I mean. I have secured, is it 1:1? Oh, 1:2, which is good. If it takes me at 1:2 is good because this is a stop loss. I'm not losing anything, I'm getting times two. But what I'm targeting in the long run is this. So now the only problem I'll be having with this trade is I am a scalper, right? That's why I'm dropping to 1 minute. There's a theory, the longer I hold, the greedier I get. You understand? The longer I hold, the greedier I get. But let's go back to 15 minutes to mark something first. So that I'll see how my system works. I think I have this. This is the important candle of which this breaks, right? So let's go to 1 minute now. The zone, I'm going to check the zone. So you see this is showing that this is the low. This is the important low, but if I'm to follow structure now, this is it. And you see these breaks and it broke down. So you see this is what now? A change of character from here. From this low, change of character, right? What will I do next? Look for a zone. I'm spotting a zone from after this change of character, which is my trigger. I'm in this range from this to this, right? So where am I going to look for an entry? This is where it gets tricky because I just missed an entry following lower time frame. Being patient for how many hours? Then I missed this. Do you see? Price has not mitigated that. But how can I get this right? Let's go to 3 minutes and trail important candles. So you see, in 3 minutes, I think this has been mitigated. Did you see? Let me shift all of this. Hope you understand what I've been doing since. But look at this in 3 minutes. Did you see this? This is a mitigation. I'm not expecting price to return to this zone. I'm not expecting price to return to this zone. And I also saw something just now. Look at this. Did you see that? I think the blue closed and it immediately did this. That's why I said two or more candles. We immediately did that. It means that that is a liquidity sweep if it is like 6 minutes in time frame. So you see, immediately did this. Immediately, like immediate after grabbing all this, he immediately did this. So what I'm going to look out for is this in if I was to trade this. Now I'm thinking like the scalper that I am, right? Where would my target be? The low that brought it. But all of this, what has not been mitigated here is this. Did you see that? And this is a very bad trade. If I should take this, it's going to be a very bad trade for me. You understand? It's not even up to 1:1. But if I do this consistently, this is 1:2. So you see how I get 1:2. But because I am looking at the higher time frame now, right? I'm going to be doing something like this, which is 1:1 what? 1:13. Mind you, I don't trade. Now, I want you to understand. I don't trade London or Asian session. I only trade New York session, right? So, like I told you, I already have a narrative. I have a story that I want to tell. So we have here as our overall target, right? Then I come to the market in New York session. What do you think I will do? I'm going to look for a supply zone or an important candle, whichever one you choose to call it. You see, this one has been mitigated, right? So starting from here, you see all these things has been mitigated. All this has been mitigated. We go to the next one, mitigated, mitigated, not this, but this. So this has not given me the entry I want because it has not touched it. Let me show you. So this is where I would be anticipating to get to this low because already the story has been told, right? All of this, the whole thing I've been saying is the story, and it has been told, and we have this range because this high brought this low, right? Whether I like it or not, that's what that's the high that brought the low. So you are going to mark it like this. And you see it is a liquidity graph. How many candles were dancing here? Despite the fact we have a supply zone, Look at how many candles. The price action there too matters. Because if I'm trailing my high, my lows now, right? Because this is what I am saying. Entry should be around here. But now I want to see what will happen here. What will happen here? We have another one that has a little gap in between. So you don't want to come and set limit order here. You want to be patient. You want to be patient. You don't want to come and enter here. Sorry, it is a sell. You don't want to come and enter here and put your stop above this place because you want to get this. Let's say one is to what? One is to one, which is a very bad one, right? Even if it plays out, I am not the kind of person that I don't want to be risking carelessly like that. I would prefer to do something like this if I'm doing the limit order thing, right? I'll prefer to do something like this, or I will just wait to tap here. And on tapping here, I don't want to just enter anyhow, carelessly. I want to still go back to my former time frame because as you can see this candle, let me show you. This breaks this and this failed to break this. Does that mean that it automatically goes up? No. But what are we expecting? We expect it to take this high. And if you are taking this high, we only have this. I grab liquidity to 50%. You might react here, or better still, grab this high here to mitigate 50% of here and we go down. Or better still, just up here. We will continue. So I don't know what price will do. We don't know what price will do. What we do is just analyze it and see how it goes. And if I'm using supply and demand, just supply and demand, pure supply and demand, I would have had an entry on this candle. You wonder why not this one? Because this is the candle that caused the impulse, right? So you see, so let's say I have this. We are almost having 1:13 that a day trader is having. So if I am to risk, if he's going to get 1:13, I get 1:7 in London session alone. I'm in New York, and he will stay from London till this New York session. Get to get times two of what me I can get, of which I can just now we double down and have more than what he has. So do you understand? So I can just do it like that, depending on my risk appetite. So this is what I have. Why is price reacting here? Always, if you want to know the cheat code, always ask why. You don't want to know everything, but ask why. It will help you to think and know what you're doing because you are a good trader and you know it. So if price fails here, then I would say this high will be run because everything here has been mitigated. Everything. So let's see 5 minutes. You can go up to as many time frame as you want, but 5 minutes is even showing that this is the supply. Yeah, but everything here too has been mitigated. Every single thing, unless for this, right? Unless for this. So you see, it's just to have a narrative on the higher time frame, then you double down. You just double down. You're good. So you see how it is. That's it. Double to run this low. That's the safest zone to get out this here. So this is TP1, this is TP2, and that is TP3. So trading is as it is. So I hope you understand, right? That it is trigger, entry here, and you target here. Simple. This is the setup, trigger, entry, target. And if in cases where target is a liquidity grab, what we want to see is a run of a particular low, and we take it here. Depending on what happened here, we know what to do next. So we are not we are not predicting, we are only reacting. So if I am to mark my zone, this as my important low, that's protected low, and this as my protected high. You see how I get to mark just two lines on my chart. And if this fails, it is my distance. And for this one, you can mark this. But where am I paying attention to is this place, this whole place, this whole place, and this whole place. If it breaks, that's if it breaks, this is where I'm looking at. But if it doesn't, then I'm looking at the taking the rundown of the low. So I hope this helps, and I'll do another video another time. See you on the next one, guys. Peace.